back. When it comes to investing, how to start and how to stay out of trouble are two big questions, especially as the markets react to the war in Ukraine. And with tax season underway, millions of Americans are already receiving refunds, which is a great way to start. Here's tonight's Money Monday.
You know, when we look at other parts of the economy, when something's on sale by 10 or 15 or 20%, we get psyched. But all of a sudden, when stocks are on sale and stocks are 11 or 20% lower than they were just months ago, we get really nervous. So here's what you need to do. Confront your fear and understand that this is the best way to actually reach your long-term goals. You got to build the foundation. You got to make sure that you've got your emergency reserve fund and pay down your credit card debt. But then investing really becomes a key component in your financial foundation. The whole point of investing is to grow your nest egg faster than the inflation rate. Now, if you look at the last 3 years, if you were an investor, you've made about 115% since the bottom, and that's way in excess of the inflation rate. So this is the power of compounding, of starting early and getting your plan jump-started. I think the most important thing is if you have a workplace retirement plan, it's really the easiest way to start. So that's a 401k or a 403b or a 457. They take that money out automatically from your paycheck, so it's really easy. But if you don't, maybe an IRA or a Roth IRA, you can open up an account pretty much anywhere, any bank or app, and you can automatically have money go from your checking or savings into that account. I like places where you can invest cheaply in index funds. So that means that we're talking about Vanguard and Fidelity and T. Rowe Price and E-Trade and Charles Schwab. And you know what? There are lots of options out there. Explore them. Many of these places actually don't even require minimums to start. So you literally can start with $5 or $10. Keeping it simple means maybe just using those cheap index funds, but you really want diversification. You don't want a big bet on any single area. So a little in the stock index fund, a little in a bond index fund, some cash, maybe some commodities, and then don't futz around with it. Stick to your game plan. All of these companies will allow you to actually take a risk assessment questionnaire and will also allow you to say how long before you need the money. These are the important metrics, not whether you beat the market. When do you need your money? How much risk can you absorb? Because all of these new companies have really basically democratized investing, meaning they have made investing available for everyone. So you get that tax refund. Last year, the average tax refund was about $2,800. You get that tax refund, you pay down your debt, get your money working for you.
Coming up on 6 News at 5:30.